Yo, yo, yo. We are back with a strategy creation, aka strategy breakdown part 3. This time I'm gonna go a little bit faster just because I went a little bit slower last time just so you guys could get everything, but I'm gonna go as if you guys know everything and watched all the videos so far. So let's just briefly break down these strats in simpler words. Alright, so alright, let's do it. Let's do it, man. So first thing we want to do is mark out our draws on liquidity. Spelled that super wrong. This is our 4 hour, 1 hour, and session highs and lows. These are our draws on liquidity. So we want to wait for a sweep on these highs or lows. And then if the 4 hour is in line with the 1 hour trend, we execute on the 5 minute. We execute on a 5 minute break of structure. If the 4 hour is not in the same trend as the 1 hour, then we wait for a 15-minute EOS. Okay, hopefully this makes sense. If the 4 hour and the 1 hour trend are in line, cool, we can execute off a 5 minute break of structure. Boom. If the 4 hour and the 1 hour are not in the same trend, then we are executing off a 15-minute break of structure. Why? Because highly likely, okay, if overall we are going up, right? Hold on, let's draw this out. If we're going up like this, right? Say boom, this is a 4 hour candle and the 1 hour is not in line, what does that look like? It looks like this. It's a retracement. So we want to wait for high confirmation to enter here, right? Somewhere within here, probably a 15-minute break of structure, and then we could just continue on that uptrend. All right. So that's the logic behind why that's different. All right, let's get into the next step. Because now, once we actually see this happen, liquidity sweep, break of structure, now we wait for a confluence to get tapped into. What confluences do we have? We have fair value gap, we have order blocks, short for OB, we have equilibrium, and what else do we have? Inverse fair value gaps and SMTs. So we have all of these extra tools that we can use to collect data on whether we should take a trade or not. So once we see these confluences get tapped into, we wait for buying or selling pressure out of the confluence. What does that look like, you may ask? A 1 minute or a 5 minute EOS. I meant to put a slash button. Okay. Yeah. Either a 1 minute break of structure or a 5 minute break of structure or inverse fair value gap on the 5 minute. You could take it purely off of that, right? And then our take profit would be at our draws on liquidity because we know what's right there, resting orders. So we have 4-hour highs, 4-hour, 1-hour, and session highs and lows. Pretty simple. All right, so let's just start from the top again. Mark out our draws on liquidity, 4-hour, 1-hour, session highs and lows. Wait for one of these to get swept. Boom. If the 4-hour and the 1-hour are in the same trend, boom, we're looking for a 5-minute break of structure, then for it to tap into one of these confluences. If we see buying or selling pressure out, then we wait for a 1-minute break of structure and then take profit at 4-hour, 1-hour, session highs or lows. Let's go back. If the 4-hour and the 1-hour are not in the same trend, then we wait for a 15-minute break of structure. We wait for one of these confluences to get hit, a fair value gap, an order block, an equilibrium, IFVG maybe, or an SMT. Then once we see this get tapped into, now what we're waiting for is a 5-minute break of structure or a 5-minute inverse fair value gap. And then we'll take profit at the same places. Right, so that would be 4-hour, 1-hour, and session highs and lows. Okay, that was pretty fast. You may have to rewind that back just for confirmation. But with that being said, let's get into it. Actually, hold on. Let you guys screenshot that. All right, let's get it. So let's start from the top. Let's do this range right here. I think we did this last time. All right. We'll do Friday, Monday, and Tuesday. Alright, so Friday. Since we're doing Friday's price action, we're going to mark out Thursdays, highs and lows. So boom, you see high right there, low right here. Now we have a bunch of relatively equal highs right here, so I'll mark out the highest of them. Typically what you want to do is mark out the highest of them, but I'm also marking out this one here just because it's the previous day 4-hour high, so it still holds pretty much like the same significance. All right, so let's check the 1-hour. All right, boom, that also lines up with our 1-hour highs, relatively equal highs, so I won't mark this one out. We see lows right here, and we see lows here. We see some highs right here that also line up with these lows. I'm just going to keep these lows marked out. Boom. So now we need to identify which trend are the 1-hour and the 4-hour in. That way we can know which time frame we can use for our break of structure. So going into market open, we are actually in the downtrend for the 1-hour. On the 4-hour, this is actually this is actually a downtrend too. We actually broke structure right here, technically. Full candle closure, but beneath the most recent low. So since we're bearish, and we're bearish 2 times. Bearish on the 4-hour, bearish on the 1-hour. So now we can execute off the 5 minutes and see what we got. Alright. So let's zoom. Let's see. Alright. So going into London session, we're actually moving downwards, which is cool, right? But then, right, we see this very large shift. We see a shift in direction, right? This is very significant because what is this telling me? This is telling me, okay, we have a gap right here, we have a gap right here, and we just invalidated that. inverse fair value gap, basically, with these two gaps. So price is telling me bull action, but we're not sure yet. We still have to confirm. So how do we confirm that? Going into market open, we see these lows get tapped into. So we know that there's resting sell orders right here. So there's people going short, right? And also people stop losses right here. A bunch of liquidity. So we see the liquidity sweep. Boom. Now I want to see us break structure to the upside, right? Since we took out lows and hold up. We took out lows and then we make initial moves up. This is telling me, okay, this looks bullish. So boom, boom, boom. Where's our break of structure? Here. All right, cool. What do we see? We see a fair value gap. Oops. We see a fair value gap here. And just to be specific, what candle broke structure? This one. This is a full candle closure above this most recent high, right? And we left a gap here. We also left a gap here. And we have other confluence as well. We have order blocks. So that would be the leg down that caused the break of structure. So that would be this. Doesn't get tapped into, and sometimes that's not going to happen. Not every confluence is going to get tapped into because, again, everything after liquidity and break of structure is just a continuation confluences. But liquidity, break of structure, bread, butter, baby. That's what we want to see. So we actually see this get tapped into, right? This fair value gap right here. So boom, all we need to see now here is buying or selling pressure out of it. 1 minute break, 1 minute break of structure, enter, and then target our highs. You can put your stops below this gap for protection. You can put your stops below this gap, or you can put it under the low within the gap. Though I unintentionally did that. Okay, because I've been meaning to talk about where you can put your. There's three types of stop losses you can do. You can do it under the liquidity sweep. You can do it under a gap, right? And then you could do it under the low within the gap. Now that's the highest risk to reward, the low under the confluence. But if you feel comfortable doing that, then by all means do that. But you can see here, boom, we target these highs. So this is instantly a 1 to 1.94, damn near 1.2. So let's see, what else can we target? Let's see, do we have any previous highs? Okay, yes we do. We have these highs here. Boom, so we can target that. Hold on. We can target these highs here. And then we also have a fair value gap. I don't know if I mentioned, but what lies within fair value gaps? An imbalance of orders. So what's not in here? Buy orders. So you can also, when going long, take profits in here. This is literally the this is what happens when a fair value gap gets filled and then gets respected, because look, people take profits within these gaps, or press sell within these gaps. And what are you doing when you are taking profit within anywhere? You're selling your contract. It all works, bruh. It don't get no simpler than this. So what is this? This is a 1 to 4 trade. 1 to 4 trade. Alright. Let's do this right here. Let's go into Monday. Actually, I want to show you guys the the strat here. All right, so I want to show you guys the 1 minute version of this. Boom. 1 hour. Actually, 4 hour is bullish. Actually, we did that already. I don't want to do that. Let's do. Let's do this because this is very interesting where you trade into a gap. This is technically a continuation trade. So let's do the 6th. All right, so boom, we have 4 hour highs here. All right. Do we have lows? We do have lows. Cool. We can mark out that low. This is hella far down. Actually, I'm not. Like, that doesn't even make sense. Like, in situations like that, if you see a low just like OD far, don't even do it. All right. So we see this gap, this 4 hour gap. Cool. We can mark that out as well. Let's see, Monday. All right. We see these highs here. What else do we see? We see these lows here. I don't know why that took me just so long to mark out. Alright. And then, let's see. Nope, nope, nope. No other draws. Really this. Oh, we see a gap right here. So you can see, like, all this stuff comes into play, bro. Alright, so now that we have that marked out, we're going to do Monday's price action. Actually, yeah, I want to show you guys this because this is just like textbook right here. Let's go to the 1 hour. Alright, so you can see the 4 hour that we were just on is bullish, but the 1 hour is bearish. And I want you guys to peep what I'm looking at right now, right? Because peep how, look, we break structure here, okay? So boom, full candle closure above the high. This downtrend, this move down is a 1 hour downtrend. And what does it trade into? This fair value gap, all right? But I'm getting too ahead of myself. All right, so let's mark out our highs and lows. All right, that's a little bit. Boom. Boom, boom. Okay, so literally everything's already marked out from the previous highs and the previous lows that are marked out. So you can see how the market it's rigged, but it's it's predictable. So it's like a good kind of rig. So now we can execute on the 5 minute. So going into Monday, boom, we take out this low, cool. Break structure, cool, right? Full candle closure above this high. So now we can mark that out. Boom. And what do we also do? We trade into this 4 hour gap. Bro, I'm telling nigga, this shit I'm sorry. This is in real time, bro. I love this. Look at this. This is just textbook. What else do we see? Fair value gap. Alright. Boom. What else do we see? Order block. What's the order block? The move down prior to the move up. Doesn't get tapped into? Okay, cool. Remove that. Equilibrium doesn't get tapped into. Nope. Cool. SMT doesn't get tapped into. Let's see. Where's our trend line? So we want to take these lows right here. Now, ideally, I'd want to see ES higher than these lows. So I want to see NASDAQ be lower, and I want to see ES do something like go higher up here. So let's see what we did on Monday. Where's Monday? Okay, boom. You can see ES makes a higher low than NASDAQ. So what this is telling me is like, okay, ES already took out this level of liquidity and is already moving higher. NASDAQ is just on that lagging shit. What's that? NASDAQ is just lagging behind. So this is telling me, okay, boom, NASDAQ is next. So now I'm going to go to the 1 minute. Boom. You can either enter off this breaker structure, boom, or or you can wait, because this right here is an aggressive ass entry. I'm not gonna lie, because we didn't even, this is on the way forming that 5 minute candlestick that eventually turned into a breaker structure. Then if we follow the traditional fundamentals, we tap into this gap, we get a full candle closure out of it. Okay, cool. Now we want to wait. We want to wait until price makes a move and decides where it wants to go out of this confluence. Because if it respects it, then we're going to continue higher. So boom, we end up breaking structure here. So you go long here. Boom, break structure, cool. You can either put your stop here under the low, within the confluence. You can put your stop under the gap just to give yourself some space, or you can put it beneath this low, right? Between under your 5 minute low. Me personally, I would put it right here and then target this high. Hold on. You can target this gap right here. And then boom. That's a 3-to-1 ratio, guy. That's a 3-to-1 ratio, my guy. And then I really want to show you guys something right here. All right, so let's go back to January 4th, because I actually took this trade. I want to show you guys something. New week opening gaps. I have not talked about this in a while, but let's look at the closure of the previous week. Boom. And the open of the next week from January. You can see this also eventually lines up with our new week opening gap right here, right? Boom. Let's go all the way back here again. Boom, this is our new week opening gap. So you can target that as well. So you can see how all these confluences eventually play out. You feel what I'm saying? So this is not something that's going to be 100% every time. And this is going to take work. Like, it took me a long time to get good at this. And all good things, everything worthwhile and things that are good do take time. I'm not going to lie. Like, I didn't just wake up and just get good at trading. I sucked, bruh. Not gonna lie. But eventually, you put the work in, you put the practice in, and then, bro, like, you'll see results. If you put your mind to something and you, I know this is so cliche, bro, but like, my guy, bro, like, literally, you can do anything. You can do anything in this world that you want, my guy. Who's gonna tell you no? This is your world. Do what you want to do, and don't let anybody tell you else otherwise. So that's it for the strategy creation. Um, You guys can see it. It gets messy, but once it starts clicking, bro, it's gonna start clicking, dude. So I will see you guys on the next video. I'll probably do like a psychology video or extend on how to take profits mixed with like a strategy creation. So yeah, I will see you guys later, man.